Hey everybody, it's James here with Crypto Common Sense, and I wanted to shoot a market update video. It's April the 11th, 2022, and the markets have bled and bled and bled today. So let's talk about this. Let's talk about the short-term stuff instead of looking at macro views. Let's talk about what's actually happening on these markets. So this chart here, this is the S&P 500 or the US 500. And essentially this blue line is our 200-day moving average. This is a weekly chart, but that's a 200-day moving average. And what we've done so far is we've actually broke below that for the first time since early 2020. We came back up, and it looks like it's failed. It didn't give a perfect bearish retest, but it does look pretty toppy, and it does have some serious similarities with what we would think of in a bubble chart as, euphoria and then complacency and then a bear market kicking off, a serious bear market. It's already pretty serious at this point. The markets have actually, they pulled back about 14.5%. And so now they're, it looks like, and we don't know yet, but it looks like they're trying to continue that move down. The US 30, which is the Dow Jones Industrial Average, this is again a 200-day moving average, and you can see here that we're in this upward channel. We fell out of that channel last month or in February. We came up, and this looks like a very textbook bearish retest, not just of the channel, but also of the 200-day moving average. And so this is actually one reason that if I was trading this particular chart, that I may look for short positions in that area, coming up to resistance, leaving behind a big supply wick, all that kind of stuff kind of paints that bearish picture with more downside. I'm not short on the Dow Jones, just to be transparent, but that is, if I was trading that chart, it would definitely be a short that I would be looking for. The US 100, same story. This is, of course, the tech stocks, and this thing has ran up, had the big pullback. This is a pretty significant pullback over on the US 100. This was about 22%. And now, of course, we've got this bounce that, again, resembles a complacency bounce. It's failing at the 200 moving average, and, so far moving down off of that. If you look at this chart, again, it looks like euphoria, complacency. It looks like a potential for a serious bear market. Ironically, if you look at Bitcoin, you're going to see the same thing. You're going to see that we did fall underneath the 200-day moving average and that we were rejected right at it. So again, that would be one reason for a short. A lot of times with Bitcoin, you find support on your 50-day moving average, which is also in other stocks as well. So if we put a 50-day on there, I had hoped yesterday that this would actually stop that drop, but it just didn't do it. Need to go to a daily chart. So there's the 50-day there. It came down and just cut through it like a hot knife through butter. So again, this was a death cross back here with the 50-day crossing the 200. So that's, a little bit concerning, obviously. And as I talked about in the last couple of videos, Bitcoin is obviously putting in a potential bear flag. So you have your flagpole, your bear flag itself, and then a continuation move can be expected if it breaks south of that channel. Okay, so the channel looks like this, and it's a perfect channel, as you can see. It's very, very pretty as far as charts go. And so, I'm watching for a breakout of that channel. It looks pretty rough. If we take a look at the total market cap, what we're going to see if we go over to a daily chart, actually, we can see it on a weekly chart just as easily, or even a 3-day chart, which is my favorite chart for larger time frame trading. We can see that there was a left shoulder, a head, a right shoulder, and this looks like a potential retest of that head and shoulders before more downside. Now, the ironic thing is I remember back in 2019, I drew up a similar head and shoulders right here, and I had all kinds of people trying to tell me, you can't draw head and shoulders with a slanted neckline. That's not how that works. Well, it actually is how it works. You can Google it and read about it yourself if you don't believe me. But that was the head and shoulders, and of course that was one of the things that was pointing down toward that $4,000 to $5,000 zone, and it broke down and did just that. Broke down, retested the neckline, and then moved down. Actually had another retest of the neckline in this case, right? Oh, well, I'm trying to draw a straight line, but you get the idea. Right over there, okay? So we're seeing a very, very similar pattern playing out right now. We're seeing that break below. We're seeing the retest of the neckline, which would be similar to here. And yeah, it's not really looking too great. So I don't know what to say. You know, I mean, I know people don't like bearish videos, but you know, what do you say? We're inside of this larger range. We're inside of this smaller channel. We're inside of a potential bear flag. And as far as bullish cases go, on these time frames, these daily charts and 3-day charts and things like that, I mean, you know, we had this potential double bottom that looked like it was maybe going to be nice. And I was hoping that we just get a retest of the top of it like this and then a move off, but it failed. And so the double bottom is kind of a moot point now. You know, there's not a whole lot you can really say about it. It's just this range. So it is looking pretty nasty. As far as RSI goes on total market cap, the weekly RSI, you know, it's just kind of in the middle there, not too exciting. As far as daily RSI goes, again, kind of in the middle there, not too exciting. Monthly RSI, you know, we did have a triple bearish divergence on that, which of course is the three little pig setup that I've taught for free for a few years, right? You get a high on price, a higher high on price, a lower high on RSI, a higher high on price, a lower high on RSI, and then yet another higher high on price and yet another lower high on RSI. It's a triple bearish divergence that took place over the course of about 4 years, and then of course the market is moving back. So, you know, volume down here, not a whole lot of I guess dominance on the bear side or the bull side. Volume's, you know, fairly equal, so don't really see anything there that gives me a whole lot of heads up. Just overall, this thing is looking just very, very doggish, and I really think that, other than the fact that, you know, the market cycle is due for a bear market, I think a lot of it just has to do with stocks, which is what I was saying all along, was that Bitcoin was not a store of value, that Bitcoin was actually a risk-on asset, and we're seeing that. People are trying to move money out of Bitcoin and cryptocurrency to safer investments. So if the trend target's played out, if that ends up being our bear flag, that gives it a target down around 649 billion total market cap, which is very, very close to the all-time high back in January of 2018, okay? I know some people say, well, Bitcoin topped in December of 2017, but total market cap topped a month later. Alt's had like a little run after that. So that's kind of what that's looking like. So I'm going to go ahead and wrap the video up there. As always, please remember, I am some guy sitting in a spare bedroom. That means that nothing in the video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable assets. If you enjoyed the video, give it a thumbs up. Make sure to subscribe to the channel. As always, you can check the description. There's links there to join Patreon and also my trading course and the Facebook group, which I'm not sure how much longer I'm going to do the free Facebook group, but it's there for now. So if you're not a member, feel free to join. All right, this is James with Crypto Common Sense, reminding you, please trade safe.